Welcome back to, and thanks so much for joining us here on America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker. 419-794-3030 is the phone number. The website is arhq.com. Recently, we've seen 3 different surveys on retirement. Some of the findings include more than 1 in 4 retirees say that they've been forced to live more frugally than they thought they would. Over 1 in 3 wish they'd had eliminated more debt before they retired. And 3/4, 75%, plan to have some kind of work in retirement. Less than half of them actually follow through to that, though. These results point to people needing more money for retirement than they had predicted. Nolan, how does creating a written retirement income plan help head off these problems?
Well, creating a written retirement income plan, I believe, is one of the crucial things that people need to do to be able to be confident in retirement time. In fact, we've spent so much time developing this that we've put together our process. It's called the independent income system. And again, if you go on YouTube, just type in independent income system. You'll be able to watch a video that talks a little bit about how we put this together. But when we're looking at it and you're thinking about some of the things that factor in this consideration, again, why are 1 in 4 retirees forced to live more frugally, or 1 in 3 wishing that they had more debt paid off, and 75% plan to work in retirement? It's because all sources lead back to income. So you've got to focus on income. We run into a lot of people, and a lot of people have maybe developed some type of financial plan in the past, and that maybe ran some calculations that tells them the probability of success. And there's nothing wrong with having a financial plan in place. I think that's a good part to an overall comprehensive planning approach. But more specifically, you want to have a written retirement income plan. Having a written income plan is going to help you take a look at a couple of things. One is look at longevity. When you're looking at longevity, you want to try to identify reliable income sources that can last the rest of your lifetime. A good example of that could be Social Security. That's a full faith and pledge of the United States government. I understand that Social Security has some issues, but again, America being the greatest country ever, that's considered to be reliable income. If you're blessed enough that you work for a company and you have a pension, and that pension is going to provide income for you and or a spouse for the rest of your lifetime, that would be considered, reliable income. If there is a gap in what your income needs are, your minimum monthly income needs between Social Security and pension, sometimes you can use it like an annuity. Or you could use a bucket of money that's non-market risk related to cover that gap of time that you want to set aside where you're not worried about the lottery of the returns of the stock market. When we look at the market volatility, the challenge with having all of your money in the market is the lottery of the returns creates the sequence of return risk, meaning taking those losses in the early years can have a very negative impact on somebody that's close to or in, retirement time. That same risk doesn't really impact people that are young and saving, but what it can do is it ultimately can reduce income over time, because if you take those losses, you may need to reduce the withdrawals that you take out. And if you're taking withdrawals out in an equity portfolio in a declining market, you could also be forcing yourself into locking in losses. Number 3 is inflation. For the last several years, inflation has been a real deal for people that are close to or in retirement time, whether it's, the cost of healthcare. You think about food and groceries. Retirement, it's supposed to be this exciting point in your life. And really, I think for a lot of people, it can be. You get to stay up late watching TV. You get to turn the alarm clock off, sleep in. You think about those fun vacations that you want to take, travel to places when it gets cold here. Maybe even just spend some time watching the grandchildren, taking them to the local park. And it also can be scary for people. I think, Chris, you mentioned it. Retirement is a point in your life that you don't want to have to be forced to go back and work again. The biggest unknown for retirees is wondering if they're going to have enough income to last the rest of their lifetime. Trying to figure that out can be kind of confusing, but that written retirement income plan, it can break it down into a couple of steps. So the first step is determining what those reliable sources are and determining what your expenses are. If you have a gap between your expenses and your reliable income sources, Then what you're going to want to do is you're going to want to maybe consider moving some money to build in enough reliable income so your minimum monthly income needs should be covered by all reliable sources. Your risky
Hmm.
assets really should be used for some of the fun stuff in life. If a retiree is looking for ways to lower their expenses and reviewing their budgets, look at the big expenses first. A good example that we had talked about in the open there was 1 in 3 retirees wish they had eliminated debt before they retired. And I would say, in 30 years of doing financial advice and helping hundreds of families retire, it is a consistent theme that my clients who are out traveling, enjoying life, and doing a lot of fun things that they want to do are typically debt free. If you have a retiree that's paying $1,000 a month for a mortgage that maybe only has a $25,000 left on the balance, it may make sense to take part of the investments and just pay off that mortgage to free up that $1,000 a month payment. The same would be true as if somebody had several high interest credit cards. Sometimes it's just best to eliminate that debt and help eliminate that monthly expense. There again is why we take that comprehensive approach, though, because withdrawals can impact your Medicare premiums, it can impact your health insurance cost, it impacts your taxes. So, one decision that you make impacts the next. The second is making sure that you have a bucket of money that's designed to give you a pay raise in the future. The cost of living is going to go up. It could be in 10 years from now where Social Security actually does do some things to reduce the payments like they say they're going to do. So having a bucket of money that's going to be a bucket that's designed to give you a future pay raise would also be another good part of that. The final part in that written retirement income plan is looking at the surviving spouse and looking at the impact of what happens when one of the spouses passes away. There could be a shortfall in income needs if maybe the pension's going to go away, half or all of it. There could be one of the losses of Social Security income. So the solution in covering those survivor benefits could be like life insurance. It could be, making sure that you're making the correct decisions with when to select Social Security or what pension option is the best for your individual situation. So if you don't have a written retirement income plan, that's something that we can do. It's part of our retirement team action plan. That retirement team action plan, we can go through that. And again, because all loads lead to income, you may already have a financial plan. Maybe you're not confident in your financial plan. Maybe you're wondering, is there a way to get 20% more income and take a look at getting some advice and guidance on what you're doing? That's exactly what we can do. If you have more than $250,000 of investable assets and you don't have a written retirement income plan, our office would love to sit down and have a conversation about how we can help you out. All you got to do is just get a hold of our office. We're more than happy to help you out.
And that starts with that phone call, 419-794-3030 is how you reach out to the team. Just a reminder, the retirement accounts you have, the 401ks, wherever you've had money saved, well, that is not a retirement plan. That is obviously a major factor of it. But how do you turn that into income and then, possibly guaranteed sustainable income? It's all part of that retirement team action plan. You can find out more. Get that put together for you complimentary. If you have saved $250,000 or more towards your retirement, give a call, 419-794-3030. or visit the website, arhq.com.